This is Bitcoin logarithmic chart that will show you Bitcoin all-time high for this bull run 2025. Ever wonder why some traders swear by the logarithmic charts versus the regular linear charts? The difference could be the key to unlocking your big next crypto trade. Always go to Investopedia. I love this because it has key takeaways. There's several articles on logarithmic charts versus regular linear charts. And again, they do have the key takeaways so you can read this and grasp what the article's about. If you're new here, don't forget to subscribe and hit that notification bell for the latest updates. Today, we're going to dive into the most debated topic in crypto trading, logarithmic versus regular linear charts. We're going to break down both the pros and the cons of each to help you decide which one is best for your trading strategy. First, let's understand what a regular linear chart is. A regular chart, also known as a linear chart, plots price movements on a standard scale. Each unit on the vertical axis represents an equal amount of the price change. However, for the logarithmic, uses a logarithmic scale, where equal distances on the axis represents equal price changes and are plotted as the same vertical distance on the scale. Now, using the logarithmic price scale is ideal to show long-term trends, as they can compress large price ranges and highlight percentage changes rather than the absolute changes. And by doing so, it provides clear signals for support and resistance levels, trend lines, and patterns over a wide range of prices. Now, this can be misleading for short-term trading or with crypto or stocks with minimum price changes. Now, most of us are used to the linear or regular price scale, which is pretty straightforward and easy to read, and this makes it ideal for beginners doing short-term trades, mid-term trades, who need to see the exact price changes. And this is excellent for traders that are tracking the precise price movement and smaller price changes, which is ideal for scalp traders and day traders. So now that we covered both logarithmic and regular linear charts, let's go ahead and look at Bitcoin using the linear chart. And then, of course, if you want to do the monthly with a credit card, it's right here. And then, of course, if you want to do lifetime, here's the lifetime. Now, if you want to pay with crypto, then just send me a message on Telegram. Now, there's a couple key features that I want to point out. The yellow signifies the month of the Bitcoin halving. This is a monthly time frame, and we have all four halvings identified in yellow. Then also we have the red identifying the all-time high. Another feature I want to point out is the white line. This is the 9 moving average. And notice that every time after the halving, the price tends to stay above the 9 moving average. After the halving, price action breaks below and stays underneath the 9 moving average until it gets closer to the next halving. Here we had the next halving. Price action stayed above the 9 SMA on the monthly time frame. After the halving, it kind of went in between and then finally broke below. And then prior to the next halving, broke above. Once this halving happened, price action stayed above the 9 SMA on the monthly time frame. And then it kind of went sideways a little bit on the 9 SMA until it reached the all-time high. Then it broke below and several of them started closing underneath it, until we started approaching the next halving, where now the price action was above the 9 SMA. Now, here's another key point that I want to mention. After every halving, the price action either pulled back slightly and maintained above the 9 SMA, or the price action continued upward, causing the SMA to follow it while the price action maintained above the 9 SMA. So here, after the halving, price action pulled back slightly, maintained above the 9 SMA. Same thing here, pulled back slightly, went sideways, maintained above the 9 SMA. Now, why am I mentioning this? Well, if we look right now, we're above the 9 SMA. So if we were to pull back, we're looking at around 50K, unless the price action goes up and the moving average follows the price action. So if we continue going sideways, the moving average will catch up to the price. And as long as we don't break underneath the 9 SMA, we should be in good shape. However, if the price does come down, we're looking for it to hit around 50K. Now for the interesting part. From the first halving to the all-time high, it was 1 year. In that 1 year, price rose from the halving point to the all-time high 11,617%. On the next halving to the all-time high, it was 1 year and 5 months, a difference of 153 days. And the percentage from the halving date to the all-time high was 3,156%, which gives us a difference of 8,461% from this all-time high percentage-wise to this all-time high percentage-wise. Now we're going to this Bitcoin halving to the all-time high. It was 1 year and 6 months, a difference of plus 31 days from its previous halving. So we can see it was 1 year before the all-time high, then it was 1 year 5 months all-time high, then 1 year 6 months all-time high, which could lead us to 1 year and 7 months for this next all-time high. Now going back to the differences in percentages, the difference between this increase percentage-wise and the previous increase percentage-wise, we're looking at 2,448%. Now keep in mind, the reason these percentages are getting less and less is because now the market cap is getting greater and greater. Now with the data provided, the difference between this percentage and this percentage is roughly a multiple of 3.456. This is important to potentially give us what the all-time high could be for November 2025. Now, if you did the math, this is a decrease factor of approximately 3.68 times. And this is a decrease factor of approximately 4.46 times. Now, if we assume for the next one, the decreasing factor might be the same range between 3.5 to maybe 4.5 times. So we'll just use an average of around 4. So if we get this percentage from Bitcoin halving to the most recent all-time high and divide that by 4, it's going to give us around 177%, which would put us right at $164,000. Now, I want to show you one last thing. I also pulled a fib retracement from the all-time high to the all-time low, and it went right here, right on this candle wick, which is right here. I'm moving it here so you can see the wick. And on the fib retracement, the number is 20, and you can see that right here. Then I went ahead and pulled from this all-time high to this low, and if I have 20, it's way up here. But remember, we're reducing the percentage for the next all-time high. This one came out to 4, and you can see that right here. The wick is right at 4. So now this got me thinking. It's a multiple of 5. So if we divided 20 by 5, it gives us 4. Now, what would I have to divide 4 by to give us this price? Well, I was very shocked when I saw that it was a 2.786. And whenever you're using the fib levels, we love the 786, the 681, the 382, the 236. And once again, this one happens to be 2.786, which in my opinion is going to give us 177% gains from the halving price to the next all-time high price, November 2025. Could the market extend or Bitcoin price go even higher? Sure could. However, for this Bitcoin cycle, this bull run, I'm standing by 164,000. Let me know in the comments what price you think Bitcoin will have this bull run for its all-time high. I would also love to know, have you ever used the logarithmic charts? And I'm pretty sure I'm going to get this asked in the questions. To do the logarithmic charts, you come down here to this little gear. Once you click on it, yours should be set to regular. Just click right here for logarithmic, and then it'll change it to this, as opposed to the regular linear chart. To get it back, all you do is click here, go to regular, and then it's back to normal. So I would also like to know that in the chat. Did you know how to use this and where it was located? If you found this video helpful, make sure to smash that like button and share this with your fellow traders. And remember, logarithmic charts are great for long-term trends and percentage-based analysis, while regular linear charts are perfect for short-term trading and precise price tracking. Understanding the strengths and weaknesses of both can help you make a more informed trading decision. Everything that I say is from experience. This is what's going to save you so much time, so much money, and so much effort. Like, it's super important. Now, if you're in the VIP, I have videos that are 3, 4, 5 minutes long on average. If you want to make money, I will show you how. I would offer the free group, but it's already full. I have a huge wait list. So more than likely, if I do let 3 or 4 people go, the spots are filled. Not only that, but when people do sign up for the VIP because they're making money in the free group, I am very, very invested to make you money in this free group so you can get the VIP. When those people leave the free group and get into the VIP, well, there's just so many more people that are trying to take their spot. I would strongly recommend getting the VIP. You're gonna make money. Now, granted, none of this is financial advice. It's never hopes and dreams and empty promises, nothing like that. See what I do. See if this makes you money. I give you my real life experience based off of my trainings, based off of my teachings, what I would do at that moment versus what everybody else does, because they want to sell you their course. They want to sell you all that stuff. I show you that my stuff works. Do we win? Yes. Do we lose? Sometimes. That's part of the game. But what I do is I show you all this so that you can see, oh man, I lost today, but Joe said he lost too. So it's okay. That's what I want you to realize, guys. If you like the content that I provide, make sure to smash the like button, subscribe to the channel if you're not already, and leave me a comment in the comment box. And I'll see you on the next video. And as always, let's make this money.